Hi there, I'm Paul Waldie, and I'm joined by Ed Devlin. He's Managing Director at Pimco, and we're talking about the Bank of Canada. Now, Ed, big decision coming up on July 15th about whether or not the Bank of Canada will cut rates. What do you think they'll do? Well,
as you said, it's probably one of the more interesting decisions in a long time. The market's right now a little less than 50-50 in terms of what they will cut, but I think we think they will cut. It is a close decision, but the we had weak trade data combined with the weak April GDP data. We think they've missed the forecast by a substantial enough amount that it will cause them to do a rate cut. And the other thing is, if they don't cut, we think that then the cut potentially happens during the federal election cycle. So they probably prefer to cut now, just in terms of convenience.
Where does that leave Canada then? If we are cutting rates and the expectation is the U.S. is going to raise rates probably sometime later in the year, what happens under that kind of a scenario? Is that bad news for Canada, or does that really matter anymore?
Well, I think it's two things. One, it probably weakens the Canadian dollar a little bit more, not dramatically, but a few more cents, which I think is helpful in terms of generating exports. Then the other thing I think is when the Fed moves rates, they will probably drag up long-term interest rates. So I think short-term interest rates will probably go lower with the Bank of Canada and the weaker Canadian dollar. Long-term interest rates probably marginally higher as the Fed, as you said, starts to hike later in the year, and the U.S. curve moves up in terms of yield. So typically there's a relationship between Canadian and U.S. Interest rates, and I think that'll be a pressure upwards.
And in terms of the Canadian economy in general, we've had the first quarter negative growth. We're not so sure what's going to happen in the second quarter, but the numbers aren't looking good so far. Where do you see the state of the Canadian economy right now?
Well, I think the energy shock was much bigger than the Bank of Canada anticipated, and we anticipated. It is clearly moving into Q2. That being said, it is a very narrow hit to the Canadian economy. Other parts of the Canadian economy seem to be doing, kind of okay. I think the key thing is to watch oil prices going forward. We had a lot of stability there for a while. Given what's gone on in China over the last couple of days, we've seen oil start to fall. If that turns into a new trend, I think it could be concerning. Otherwise, I think we're okay.
All right, Ed Devlin, thanks for joining us.
Thank you.